everybody. My name is Natasha Phipps, and we are here today to get back to our investor spotlights. We kind of took a break over the summer, but we're excited to get back to these. If you don't know who I am an investment specialist realtor here in Calgary, Alberta, and I have an investor-focused team of realtors here. And we like to do these investor spotlights to shine a light on our amazing colleagues and clients that we have here in the industry, as well as provide you some value and educational content and try to spark some ideas and share what we've learned kind of in the trenches here. So I'm here joined by Kim. Kim's a realtor on my team, and we're excited to do this interview today. So I'll let Kim introduce our special guest today.
Yeah, thank you. We have Konstantin Kuligin from K5 Mortgages, and shoot.
Yeah, we're going to talk about private money lending today. Our theme for the month was also joint ventures, and those kind of go hand in hand because often people have to kind of decide between getting a joint venture partner or maybe going private lending. So tell us a little bit about you and your business and how you help real estate investors.
Absolutely, absolutely. Thank you, ladies, for having me here on your live stream.
Yeah.
And my name is Konstantin. I am a Russian Canadian. I own several businesses, and my core business is private lending. I have multiple investors that I helped in the past, from REIN community, from individual investors. We also have our bond fund where we pool money together for investment purposes, and we lend money on private mortgages. First, second, third position mortgages, that's what we do. I also personally own a loan company. I've done over 280 loans myself personally. We lend on a different assets, townhouses, condos, art collections, unsecured loans, and we know how to structure it. I also manage over maybe 300 files for investors, individual investors, and we also have about 40 files in our bond fund right now that are mortgages.
Wow. Very good.
We have a little bit of experience in that. And,
yeah.
We are very aggressive in this when people need money, because we believe that you need to get money right away. That's on the borrowing side. And on the investor side, we also like that the investor receive a very stable fixed income secured by real assets. I personally lend, on different assets myself. I have a team who collect us. I have a team of lawyers. I have a team of assistants who help us. We are licensed in Alberta and BC. We have an office here in Calgary, and also we have an office in North Shore, Vancouver. So we are in both provinces. So we lend only in these two provinces at this time.
Okay. Can you rewind a little bit? How did you get into this space? Like, how did you get into real estate investing and private lending for kind of those of us who don't know your background?
Absolutely. I came to Canada in 2010. In 2012, for the first couple of years, I started learning English and kind of make sure I can communicate properly. I read Rich Dad Poor Dad book when I was in Russia.
Yes.
And it didn't work out because in Russia you don't own, you mostly kind of inherit houses because it's a third world country, you inherit houses from your parents. When I came here, I didn't have 500,000 to buy cash purchase for the house. What I did, I have to rent for a year. I said, oh my goodness, that's awesome. So if I rent for a year, because I don't have credit history, then there is other people who will do that as well. And I joined REIN Group in 2012. I'm a member for about 9 years now.
Wow.
Still there. Love education, love connection, love networking. And what I learned after about my first couple of houses. So after first year, I bought a house and another one, and another one I bought in BC or in US in Houston using tax sale strategy. And then I realized that whatever cash flow I'm making, a couple $100 a month was not exciting for me, because my goal was to have 50 houses.
Yeah.
And I said, okay, 50 houses is kind of good number. I get $100 cash flow. I get like $5,000 a month passive income. I don't need to do any work. But I didn't realize that how expensive living in Canada, and 5,000 even doesn't cover my my housing expenses nowadays.
No,
so,
right.
I realized that you need to be, if you want to be on the top of a capitalist ladder, you have to be of some sort of bank or lending facility. So in 2013, I got my mortgage license. I tried to work with a bank. In 2014, I learned private lending because lady came to me and said, I need money. I said, okay, here it is. 2014, I joined also my mentor, and I worked with him for many, many years, and I make him a lot of money, as well as make for myself a lot of money. And I realized that private lending is the way to go. It's on the investing side of things, right?
Yes.
Because I, at the time when in experience in Alberta, boost and bust with the market, so I only rely on cash flow. I count, your because that's the only one you can spend. You cannot spend mortgage pay down, you cannot spend appreciation. And I found that for myself, it works best for me because I don't like to deal with toilets. I don't like to deal with everything. And also don't like to deal with property management companies because eventually I've had a couple of property management companies. I found that nobody cares about your properties rather than yourself. So they can get a very good property management and they can, manage 80, might be 90% even out of it. But you still have to kind of worry about this.
Absolutely.
And then I decided to start the company. In 2016, we started my loan company. And I said, okay, now I want to have 1,000 loans. And I said, okay, because I didn't realize that it's a lot of work, right? I just looking for numbers. And at about 200 loans, we start kind of slowing down. Right now, we just don't even fund small loans. We're going on a bigger scale right now with our bond fund. 2017, 18, when I realized that I cannot just take more individual investors, like one-on-one investors, because they have so much money and a lot of people have so much money and there is not enough deals.
Right.
So we realized to pull this money together. So we went through offering memorandum, lawyers prepared, we spent hundreds of thousands of dollars on lawyers' fees to get our offering set up. And now we want to lend bigger. So we like to do products such as for flippers, for example, where we can fund, their purchases. We like to do, first, second, and third mortgages quick in and out because we charge a lot. It's double-digit returns because we pay in investors about 8%.
Right. Okay.
And we want to make sure that we can keep a little bit for ourselves, and but the borrower obviously pay for it.
Yes.
And we like to work with individuals who are going in and out for flippers, for example, right? Like people who wants to renovate houses and want to do something good, like bring value, like increase value. Renovation is one of those, right? Or they might be buy very, very cheap at discount and might be build a garage, like anyway, how you can improve value so they don't stick with private mortgages for the rest of their life. Within 6 to 12 months, it should be enough for them to get in and get out. And that's what we're doing on the flipper side. When we say, okay, do you need some money? We can offer you something. And we also partner up with some of the crazy mortgage investment corporations, because right now money is so cheap, even I cannot compete. Like we're getting some money at 65% loan to value within 4 to 5%. Like that's unheard of. Like it's so cheap. But because we pay in investors 8%, I cannot lend our own money at so
That's great.
cheap rate.
Yeah.
And we have a different niche for that. In order for us to deliver 8% to our investors, we are lending to the borrowers who have some sort of problems, right?
Yeah.
And that's kind of find out that it's a perfect niche for us, because people paying, they don't even realize that they're paying on credit cards between 12% to 36%. And when we give them a little bit of money and charge them a little bit, it's still win for them because they're paying less.
Yes.
And that's how we're trying to grow our business in that way. So when I learned about this, like I said, okay, there is 4 stages in my view in real estate investing. People starting small, buying their own houses. That's how I did. That's probably how you guys did.
Most people, yeah.
Whatever you can buy, you buy it yourself. Then there is 5 to 7 years time span when you stabilize the property, get some cash flow. Then your friends and family said, oh my goodness, you're so smart. I want to invest with you. Some people don't even pass this. They don't have patience. After that, the money will come to you. So you start doing joint ventures. You might be buying duplexes. And then at that time, you got tapped by the bank. That's the only way how you can grow is through joint ventures.
Yes.
And then there is another 5 to 7 year span. And with this span, I said, well, it's kind of boring. I have 10 houses, 20 houses. And I said, well, Now I want to have one house, one building, but 10 units in it. So
That's
you
right.
move to another stage with a commercial. And
Mhm.
in this stage, that's where people lose money. They lose money because they go in something new because the boring investment doesn't work for them, but it's actually working perfectly. They
That's
just
right. Yes.
need something more for whatever reason.
Mhm.
And so they start land development. They're doing some big projects. They're doing, this and that, assignments, and eventually, it's not done up very well in most cases.
Yeah.
Yeah.
And then, for those people who kind of, start doing commercial, they grow this way, and they getting older, they getting bolder like me. They realize they have a family, they have kids, all of it. They don't want to do all this work.
Yeah.
And they move to the last stage, which is private lending,
Mhm.
because they accumulated some capital. They sold their holdings, they transfer wealth to their family or friends, family or kids, and they create a trust funds or something of that nature, and they start just lending money. And at
Yes.
that stage, they don't need growth. They just need preservation of capital and receive monthly income.
Yeah, absolutely.
So when I find out about this force, like, why am I doing like everybody else?
Yeah, just skip ahead.
Exactly. I just jump over here, and
Yeah.
and I truly believe that, like Scotiabank saying that you are richer than you think.
Mhm.
People don't know where to get access to money, right?
Definitely.
Because they are, programmed by the banks. And that's when they're talking about joint ventures. So like, that's the best, thing. Just ask you, first of all, you need to ask your family and friends and fools, right? That's the 3F that you are asking for money. People who will trust you, people who know you for a long time, people who like your personality and like your attitude and like what you deliver results. They watching you. They're watching your people, watching you all the time. In order for you to build a very good joint venture practice, you need to just deliver, right? And might be like 2-3 years you do it on your own, but who cares? You're still doing it. They missing out, but you're still doing it. And might be you don't kind of grow at the pace that you wish and desire, but you still, and then you will see the growth, because it's like a, what is called, like a hockey stick, right? Like,
Right. Yes.
in the beginning you don't have anything, but then in the end it's just like, oh my goodness.
Exactly.
So,
exponential growth. Exactly.
Right.
Well, and I think, like, private lending, it's thrown around a lot. So there's benefits to using someone like you who has the experience and knowledge and knows how to lend money out safely, rather than lending it to, who knows who. What, like, if I was coming to you and be like, okay, I've got X amount of money, I want to lend it out, what would that process look like? And what should I expect coming to you for that?
Oh, that's a fantastic question, because I want to make sure that you understand as an investor all the risk associated with that.
Yes.
Because all investment carry risk, and of course you can lose all your money, like that. Because like you said, you don't know who you work with.
Exactly.
And that's very important. I have some clients and because I treat like your money as my own. Right. And I want to make sure, because I had experience in the past that people don't treat your money as your own, and they just do it and blew this out, and they lose credibility, and they lose face, and they lose everything. But they can, short term, they might kind of drive on a nice cars, because they spend my money, but they eventually, they come back, to borrow money from us, put it that way. So we educate our investors on the risk associated with that. Then we show them, after they sign non-disclosure agreement, we show them what kind of due diligence we do, because we're not a regular mortgage broker office that kind of send you a file just for the sake of, here it is, landed, that's your risk, I don't care, I just want to get my commission.
Yes.
Right. Mm-hmm. So what we do is we help an investor from start to finish and post funding as well. So our relationship doesn't end up at when we got our commission and you lend your own money. We also help them with tips, advice, how to collect, how to foreclose, how to push people, how to think differently, how to be able to protect even further their investments. Okay. And after that, depends how much cash they have available. We might invite them to join our bond family, right? This is our bond fund, where we have our personal money, our friends and family And we just opened up this for a little bit more for retail public recently. So by working with us, you will get support.
Yeah.
You will get outstanding results. There is no question about that. But what we are proud of is you can call and ask questions, you know, and we want to keep, that's why we don't need too many investors. Like, people don't realize when you start delivering results to people, they will borrow money from their friends. Don't tell them this thing, lend on their behalf and give them a little bit percentage of that, like exactly what banks do.
Exactly. Yeah.
So that's how we treat our investors who join our lending family.
Yeah. And that's, you know, that's a really good point, is if someone's not putting out the risk right away, that's a red flag, right? If you're speaking to anyone about this, because doing the due diligence and the homework that you do, that part is so crucial and critical. So I love that. Do you have any questions about that?
No,
That's pretty good.
This is why I like Konstantin, because he knows this stuff, and he teaches you the risks and what's involved in borrowing money. And, you know, it's not risk-free, and there are things that you need to watch out for. But if you're aware of them before you start into this, you kind of assess what your level of risk is.
For sure. Yeah. Okay. So that's kind of the, like, I want to invest with you. Now, if I have a project or something, that's another element of your business. I can borrow money from you for these short-term projects. So you mentioned like 6 to 12 month type things, flipping programs. Is that the most common kind of type of investor that you're working with on the borrowing side?
And that's a very good question, because I tell what kind of rates we charge, right? Like, we pay investor 8, so I cannot lend money at 8. We charge a little bit for ourselves. So it has to be double digits for the investor.
Yes.
And some investor doesn't like that because, oh, I don't make any money. So we tell them, investors, like, because you don't go and search for the property, you know, so you can actually create the opportunity, not just, oh, I was on MLS and this is a house and I make, you know, a little bit here. Oh, if you charge me 10%, I cannot make any money. Well, because it's not a good deal in the first place.
Exactly. Yeah.
So when we lend people money on this kind of short term, we want to make sure that they succeed. Sometimes we actually save them from themselves by not giving them money, because they're excited, they run a spreadsheet, not on paper, you know, on a spreadsheet where you can change the numbers.
Yes.
Oh, I can make a little bit of less profit. Oh, if I hold property for 1 more month or 2 more months, then I will be break even. But that's kind of really bad scenario for those type of investors. I would recommend them to work with a company like you, who is specializing in finding those deals, because that's a skill set, you know, like that. Like, I admire you guys, because I was talking to Kim on a weekly basis, you know, on deals that we can fund and do. But for those investors who are looking for that, they have to work with a real good realtor, not their brother-in-law realtor, not the realtor they went to school together, and then, you know, they don't know what is private mortgage is, and they only know that only banks who lend in is RBC. You know, they have to know the different ways. And how we start with those investors. So we do an assessment because we like to sell Manulife product, which is Smith Maneuver readvanceable mortgage. And we actually, for 5, you know, first people who kind of reach you out, guys, you can get this book for us for free. So they have to contact you, and you just send us their mailing address, and we can send them this book. So for those who wants to learn and to make at least $450,000 over the 20-25 year term, that's no brainer. So we start with that, because most of the people thinking about how I can get my next rental property or next flip property, but they abandoned their own personal affairs and like their mortgage. That's the largest debt that you have. Why not to make money from it? And when I don't need my own mortgage. No, you do need your mortgage, because you need access to cash. You need to get a flexible solution when you don't need to even go and borrow money from joint ventures.
Absolutely.
So, and like I said, on the borrowing side, for 65% loan to value, we can get about 4 or 5% money. But that means that you need to put more capital up front. So we as a lenders, so creditors, we reduce our risk exposure like significantly. No question asked, 35% down, you get 4 or 5% rate, do whatever you want with this money. If you're asking and you need more cash, right? Like you're talking about 75% loan to value, 80, 85, might be 90. Some of the mix that they do like $10,000 down payment.
Yes.
We probably will not do that in the near future because we want to have a skin in the game for them, right? And we also like to work with people who are into it, right? Some people say, oh, I just want to flip. Okay.
Yes.
Why do you want to flip? There is so much risk. There is so much associated with that. And about 80% or 90% people don't make money with just a flip. But you have to have a business. You have to have wholesalers coming with the deals. You have to work with the professional realtors, like your team, that kind of will send them deals because you analyze the deals for them, like if it's a good or not, right?
Yeah.
So in this case, I'm telling them, like, you need to kind of step back first, analyze your personal situation, where you're in, and then decide where you want to go. And if it's flip is your business and you've done a couple of those, great. I've done, like, we just renovated one house that we foreclosed on, and I don't like that. It's just too much work managing contractors, getting the bus stop in. Everything is delayed due to COVID. That's just not my strategy because I just do it because it's forced me to protect my capital. If I have, like, I call, you guys, and you just take over the property and you do all this stuff.
Yeah, absolutely. That's the thing about flipping. It's not something you just, like, in my opinion, just, I'm going to flip a house. I'm going to, like, have a hobby. Like, no, this is not a hobby. This is not, because every day counts, every month counts. And if the project doesn't work with private money, then it doesn't work, in my opinion, as well. You're too tight. Your numbers are way too tight, and people get creative and they start to, like, be a little bit more flexible on their numbers when they're excited. So a huge benefit to going to private lending like this is you have another pair of eyes on your deal. You have someone else looking at it who's experienced in this that can say, no, these numbers maybe are not quite good. There's too much risk here. So that's another huge benefit. Having as many people look at it as possible. Your realtors, your lenders are there to try to make sure you succeed. So I love that.
And also I want to add to that, Natasha, is if lender doesn't like your deal, then you should not like a deal. You should not crunch your spreadsheet to make sure, oh, I'm liking the deal. Like, lenders has to say, yeah, here's the money. But then, you know what? Like, you should probably find a better deal. But and most of the people are lazy. For most people, it's just a hobby. Most people not serious in that. Most people went to a 3-day seminar and they call us, on Monday because, you can flip houses with the private money right now. It's not happen as usually, like you have to be professional in it, right? Because otherwise you just need to borrow money somewhere else for people who knows you, and you'll be able to sell them your idea and your vision on that.
Absolutely.
It's very hard to sell us because we experienced.
Yeah. And traditional banks don't like flippers. Like, I think that's a lesson people learn right away, or they think that they can just go to their bank and buy and sell and buy and sell. Banks are not interested in that. They're interested in the long game. So if you're going to flip houses for long term, unless you have your own capital available, this is the route people go. This is the route you kind of have to go. It's just kind of the way to do it unless you have your own capital. Now, you touched on the Smith maneuver and the Manulife readvanceable mortgage. I love the free gift of the 5 books. If you have not read this book, definitely read it. I know this is something that Kim's really interested in and has been studying as well. But for the people who do not know, can you give just a definition of what is the Smith maneuver, and why should all of our real estate investors know and care about it?
Well, number one, because this is not new. You can borrow money for investment purposes. That's stated in the Tax Income Act, right? Income Tax Act, or there is Section 20 or 22, I don't remember, that if you borrow money, your interest becomes tax deductible. In US, all the mortgages, you can write off interest on your principal residence. In Canada, we don't have this luxury, but we have what is called capital gain exemption.
Yes.
So using this strategy that was invented by Mr. Smith long time ago, Fraser Smith in Victoria, his son right now, Robinson, is kind of pushing this through to all the certified mortgage professionals, real estate lawyers, everyone who involved in the transaction to understand this in a better way. So basically you convert your mortgage from, well, definition of mortgage is like debt until you die, right? You just Google it. So, and everyone scared of that. But if you realize that debt is not always a bad debt, it depends on what section on your books it's recorded.
Yes.
Like you as a person, the debt for you is liability, but for the bank, that is good as an asset. So your goal is to transfer the bad debt into a good asset column so you can make money from your mortgage. And people said, I don't have money to invest, I don't have this, I don't have that. Well, Scotiabank says that you're richer than you think. That's their tagline. They trademark it, like you need to ask why Scotia knows something that I don't know. Because when you go and put money to their bank account, they already say, okay, we give you this, we give you that, because they see how they can capitalize on it. So converting this into readvanceable mortgage, and by the way, not all the mortgages are the same. RBC has a similar program, Scotiabank, CIBC have similar, but it's not as good as Manulife. And Manulife, it's like a 30-year bank. It's like $1 trillion insurance company. Everyone knows Manulife as an insurance business, not the mortgage business. Because first of all, they don't pay brokers enough to share the word with the public. Only if you don't have financial advisor or life insurance advisor, you will probably never know about Manulife One product.
Yeah.
And Manulife product is so flexible product that like I'm so excited, to tell people about on kind of one-on-one consultation. But technically, you convert your bad debt into a good debt in increments. And if you have 1 or 2 rental properties, you can convert this bad debt within maybe 5 to 7 years. So now you have $300,000, $400,000 mortgage, and it's a bad debt. And in 3 years, 5 years, 7 years, you have a good debt where you write off interest from this $300,000 mortgage. It's a smart cash flow management tool that we like to do. And like I call it like money making machine. And for those who
that is the power of compounding, yes.
And for those who will kind of send their contact information, we can also send a video and webinars kind of explaining that. But even if you're not into investing, those who are listening on this, you need to check what kind of mortgage you have. Like if you're thinking only about investing, if you kind of don't even like investing because your parents or your teachers in school said it's bad because they lose money, because they didn't know what they're doing, you should say how I can make money from the biggest debt I have.
Yes.
Because getting your Manulife product, you can just save a lot of interest. First of all, you have flexible solution. When people on COVID, they defer the payments, with Manulife, you don't have to. There is no minimum payment requirement as long as you have your buffer in your loan to value and your borrowing limit. So that's a powerful product. And that's what we like to sell. That's the only product we like to sell, because we don't like to sell regular bank mortgages because rate is so cheap. People don't understand signing this cheap rate. It means you have obligation for this company, and this company has obligation to their investors. And the reason why they give you such cheap rate, because the only way how you can get exit from this mortgage is by selling your house. It's called bona fide sale. They don't know about that, and that's what we're kind of trying to explain them. Because rate doesn't matter, terms what matters.
Absolutely.
Yes.
Thank you. Nobody reads their mortgage terms. I keep learning over and over again. 100%. The terms are way more important than the rates. So great, really great advice. So if I was a new client coming to you, like you set up a consultation, you're able to look at kind of what mortgage products I have in place now and kind of give me some different options. Is that what it would look like?
Absolutely. So you come into us, you can get for 20, 30 minutes consultation, one-on-one, confidential consultation call with us. What we do on this call, first of all, we just need to know what you want to do. What is your vision? What is your why? In order to I want to have a rental property, but why? Do you want to manage people? Do you want to manage tenants, broken machines and all of it? No, I just need income. So yes, you can reach, the goal is to have income. So if you had your job, you can quit your job, right? Yeah. Or if you worry about retirement, you want to build a nest egg. Properties, mortgages, businesses, crypto, stock market, and any other assets is just a tool to get you to your destination, right? Because I found that people just kind of think that real estate is easiest and best asset class ever, which is, and like, I have no doubt. Like I'm not in direct real estate business, but we have more power because if people don't pay us, we have a legal right, to liquidate and sell the property.
Right.
When you own a property as a borrower, then you might not have this kind of privileges. So first of all, you need to find out what their goal is. And second of all, we just need to know if they're making money from their mortgage, they're making money from their insurance. We want to make sure that they're making money from everything they touch and pay on a constant basis to the bank, to insurance company, etc. And then from there, we access the capital that they require if they want to pursue the real estate investing.
Okay.
Yeah.
You said that mortgage brokers don't bring up this product very much. Why is that?
That's an awesome question. So number one, they don't understand the product because it's complex, the product, right? Like there is also, you can have 5 mortgages with Manulife under one thing. You have variable rate mortgage, fixed rate mortgage, you have up to 10 tracking sub accounts. That's number one thing, right? The second of all is because there is no branch, people don't understand, like it's not, people don't get used to the, online kind of scenario like Tangerine and Simply right now, as well as the brokers didn't get compensated for selling Manulife One product.
Right.
So I can sell different product, get paid more, but I choose not to. I would rather charge you as a client and explaining this to you, saying, well, you have a choice. Because if you get Manulife One product, you will never switch.
Right.
But mortgage brokers every 3 to 5 years, and I've done this in the past, and I'm, I have some scenes as well, right? Because every 5 years you refinance them to bring to a new bank, saying, oh, the better rate.
Yeah.
But it's not necessarily helping the clients because rate doesn't matter. People don't understand the difference between semi compounding interest versus daily interest. Because with a regular bank, a regular mortgage, you prepay your interest for the first 6 months.
Yeah.
Right. And if you have a bonus, you put this $20,000 bonus on this, but the banks will get first because you already prepaid. You put this already on the mortgage. With a daily interest like Manulife has, then you have 20 grand, you put it in, it goes towards your principal first, not towards the interest like it's the regular bank. So I found that not knowing about the product and of course, the compensation model, that's kind of the biggest that I see. And it's complex. People don't like I have engineering degree back in Russia. And when I came here, I have to study again. I said, well, I'm not doing this. I already spent 5 years. So I call myself a financial engineer that we be able to get complex solutions in a simple format so people can understand.
Yeah.
Right?
Yeah, absolutely. Yeah, that's huge. Okay, well, that right there is really good to know. Private lending too. People are obviously worried about the rates. They're worried about that. But is there any other, maybe misconceptions or things that come up often in your initial consultation for people who want to borrow money from private lenders? Are people, generally confused about anything or have any myths or things that you would like to kind of make clear about this?
Oh, absolutely. When people borrow money, they hate you as a lender, right? Because you're charging them a lot. But we tell them, well, if you be able to get the bank's money, we will bring you to the bank. If you can't get money there, we move to the next tier, which is B lenders like Equitable and other second tier monoline lenders. If this doesn't work, then we bring you to a mortgage investment corporations where you can get, 4, 5, 6% money.
Yeah.
And the private lenders, that's like a private individuals. People don't know about them. They only work with a company they trust. So for example, if you, Natasha or Kim, work as a private lender with our firm, then basically you're the last resort for them. And that's where the pricing going up.
Yeah.
And also saying private lenders, they take your arm, leg, they're, loan sharks and etc. They will take your house. Of course, they will take your house if you don't pay your obligations.
That's right. Yeah, exactly.
The bank will take your house as well if you don't pay your obligations.
Exactly.
Yeah.
You don't own, if you don't pay property taxes. That's how I purchased one of my first properties, because I paid taxes that the county was, the state of the county was not collectible from a borrower.
Okay.
So I just paid, and that's my house. I got a deed, right?
Wow.
So in this case, you need to understand, and of course, there is also bad apples everywhere. Like
Yes.
there is bad mortgage brokers, there is bad lawyers, bad doctors, like bad apples in every industry, and they want to put you on such terms that you not be able to exit easily, or they want to make sure that you understand this. And like you said, most people don't read mortgage contract, right? So you need to make sure, like, if you're not 100% know that you should enter into this agreement, you might have some feelings about that, or you don't know the people that you're dealing with, so you don't like them, and they try to hide, and they don't, like, they're not public company, they're not advertised, and you might ask, right? Even though you might get a great deal, but sometimes might be like, and we're saving this type of clients as well later on. Like, for example, if you have a rent-to-own agreement, you sign up with a landlord, and that landlord knows that you will never exit because your credit is bad. They give you a rent-to-own for 6 months or 12 months, and they force you, but you already paid $20,000 deposit, and they force you to buy the house, and they know that you don't.
They know
it's
you
impossible. That's right. So you lose your 20 grand, you want to sue them, but all the paperwork is good, you're out of luck. So we help sometimes clients to exit these kind of agreements. Yes, it costs you arm and leg. I don't shy about that. Like, we are not the cheapest one, the cheapest money in the bank, right?
That's right. Yeah.
And if we can, we fix your situation to bring it to the bank. But if we cannot, we provide you this short-term solution, like I said, for 6 to 12 months. And after that, you will be glad that you did, enter into private mortgage. And it's easy to deal with. It's not a bank. There is no bureaucracy, decision making, like, on the spot. You don't need to wait for Toronto office when they wake up on Monday morning. Like, with my mortgages, with my loan company, we have I have a small loan company that we lend up to $10,000 the same day. Like, we can lend within 2 hours.
Yeah. That's huge.
Like, and people who has, foreclosure situation or something that is not, like, you cannot wait,
Yeah. No,
then
exactly.
you'll be able
Time
to
is
access.
everything. Yeah.
Absolutely.
And if you have a good deal, if the property is distressed, and an A lender may not want to lend on a really distressed property, like, they may look at it and go, no, thank you. Like, that's not for us. And so these solutions are really good short term. You can combine this with the BRRRR strategy, whether you're selling it back to the market or keeping it and refinancing it, get the property up to whatever you want to bring it to, then bring in your A lender once that's complete. So it helps you move quickly when you need to, which is a huge benefit in real estate investing. So that's awesome. Anything else you'd like to add?
Whatever you as a borrower, might be investor, you want to do, I think you need to educate yourself, because there is a lot of, especially in our era, YouTube videos here, flip the house there, HDTV, you can make a ton of money this way. You need to educate yourself, and you need to not to be scared to test it and jump it. Might be with a small, don't buy, a large house for $1 million to flip it, unless you're in Vancouver, that's the minimum purchase price here. But you need to figure out, and might be consult and talk and spend as much time as possible with your professionals, like realtors, mortgage brokers, lawyers. So you probably even need to invest in some sort of coaching, so you can, like, if you want to increase your income, increase your confidence, increase your productivity as well, you need to have that. And I spend a lot of money on my coaches, and I'm very grateful for my mentors and coaches who I spend money that I didn't have in the beginning, and I constantly spending a lot of money on professional development, so I stay on top of it. I think that the person on another kind of side of the screen has to understand that it's possible to do that. But people always share only good things, how they make 100,000, but they never sell I lost in one day on the Forex market $40,000. This deal went so bad, we have to kind of use private money. We spent $20,000 in cost to get this. Social media is great in this matter, but reality, that's what you should believe, I think, and that's what you should kind of rely on, is just actual facts and data. And it doesn't really matter if it's nasty or not, like you need to have that.
Yes, you need to hear the good, the bad, the ugly. We're constantly talking about that, like find the people, don't do it yourself, don't go out and do everything yourself. You may get to the same spot, but it's probably going to take you 10 times as long to get there.
You get to make all the mistakes.
Exactly. Learn from everyone's mistakes, and reach out to those professionals that are doing what you want to be doing or have already done what you're looking to do. And make sure everyone you work with is investor focused, from your lawyer to your broker and realtor. Cannot stress that enough here. You mentioned, just to kind of wrap up things, that you work in BC and Alberta. Now, are both of these options available in both provinces, whether it's lending or borrowing?
That's right.
Okay.
No.
So awesome. So for anyone watching, for any projects you have in Alberta or BC, or you want to invest, definitely have a consultation and see what you can learn, and get the book.
Absolutely. But you have to hurry up, you have an hour after this thing is over, to get, 5 minutes.
Okay, so we'll see who those first 5 people are who want the Smith Maneuver book. And do you have anything to add to kind of wrap up? I think we covered lots of great points here.
Yeah, thank you for everything, Konstantin. You are just a wealth of knowledge. Thank you so much.
Yeah.
You're very welcome. You're very welcome, ladies. And I have a lot to share as well, like anytime.
Yes, we'll have to do it again. Thank you so much for being here today. And we're going to put all of Konstantin's contact information and website and stuff in the description, so you can reach out to him for a consultation. And if you want the Smith Maneuver book, let us know. But other than that, thank you so much for watching, and let us know how we can help you on your journey.
All right. Bye-bye, guys.
Take care.
Thank
Bye-bye.
you. Bye.